What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol LCID for Lucid Group, of course, the electric vehicle maker. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. This, of course, will be more of an update since we've covered this one on the channel now for a number of times. Let's go ahead and get rid of some of these areas that are not so important anymore. Most of the gap did fill, right? I would just argue that this is so close that there's no longer the risk of the gap fill underneath us from the 30-minute perspective. Upside, we clearly broke out of this overall consolidation range. Remember, we were discussing that. Clearly, the whole market sort of gave some drag this morning. We opened very close to Friday's lows, but there was a nice rally off the bell, bullish consolidation back inside of that zone, which led to the breakout up and over $23.50. We've clearly closed above that for now, so what we're looking for is just monitoring for continuation into the next overhead target, which we know is right at 25, a nice psychological number. So please keep that on your radar into the early parts of tomorrow's session as well as into the end of the week. If we do go higher, remember, very poor structure in here. I would argue that the next overhead level should really be 27.35 to pay attention to. One thing that you could consider if we do get a false break here, so if we move back down into this consolidation range, you obviously want to see it hold this time the 23 area, right? So if we move back in here, we want to see that hold. We don't want to see it violate and move back down towards these lows. Obviously, that would be no good for positive price development. So please use 23 as a line in the sand. Anything underneath that does open the door essentially back down towards this shelf. And almost, the gap fill isn't so much the important part about this, but it's just the prior shelf of support from the daily at 21.50, right? And you don't want to be caught in that 2-point move to the downside if it does end up unfolding that way. So please, again, 23 is kind of the line in the sand, consolidation lows from this move in here. But as we mentioned, the move does look healthy. It does, or it did close above critical resistance, and we're just going to monitor for continuation to the upside. The last thing I'll do is take out the Fibonacci's from the low of this move to the high, and what you can see without me clicking is that it did technically hold the 38.2. Of course, there's a lower wick that touches the 50%, but overall, there were no candle closes under the 38.2. If we take it all the way to the top end of today's range, what you'll notice is that the 50% mark coincides nicely with that 23. The 38.2 is in there as well. So again, on any pullback, this would strike me as healthy consolidation here for yet again another attempt at these, firm break all the way on up to 25. So that's going to wrap up the video here from today's session. If you enjoyed it, let me know down below in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description. And all of that being said, I wish you a green trading week.